1. Here we go. Hello world, my name is Ara, and I'm a full stack developer with a passion for investing, and I love to teach people about investing as well. I have someone very special with me today, the best investor in the world. Currently she owns 9 stocks and 1 ETF, and I would love to tell you what I bought for my daughter, RoZara. Say hi. Say hi. Hi. So today I got a really quick list I'd like to go over, and these are 10 stocks that you can buy for your own brokerage account, you could buy for your kids. I'm just telling you the ones I bought for my daughter so that you know I have a certain degree of faith in these stocks that they will probably double within the next 5 to 10 years. So first on the list I have Facebook, and Facebook is my current favorite stock of the moment. I bought six shares for her. I try to buy about $1,000 worth of each stock for her. It has tremendous revenue growth, earnings growth. It does not pay a dividend right now, but the future prospects for the growth are terrific. And I think it has almost 2 billion users, and Instagram has about 250 million daily users. So it's just an incredible company right now. The PE ratio is about 39 to 41, give or take. So it is a kind of a high price stock, but relative to future earnings, it's doing very well. It's not that expensive. The second stock on the list that we have is Google. Can you say Google? I bought her 1 share of Google. PE ratio 33. We all know Google. We all know that it makes its money from advertising. It's a great growth company. They have like $100 billion of cash on the books. It's priced at about 33 times earnings right now, which is also a little on the high side, but compared to future earnings, it's about 28 times. And for such a strong company with a terrific balance sheet and such a terrific revenue grower, earnings grower, I don't think paying 28 times future earnings is very much. I think everyone should own a little Google because this is a long-term winner. Third on the list is Nike. Nike is a terrific company. Again, one that my daughter will know once she can say the word Nike, and one that is very good for teaching kids about stocks. This stock took a little hit. It was in the $60 range, give or take, and now it's about $52. So it's a great time to pick it up. Revenue grower, earnings grower. They also pay a small dividend, which is really good bonus. That goes right into your cash account. Fourth stock is Disney. Fifth stock is CVS. The two of these companies are revenue growers. They're very easy for kids and just everyone to understand. Everyone knows what Disney does. Everyone knows what CVS sells. CVS basically is getting more and more business every year from selling pills to baby boomers. There's just so many people turning 65 every year, and just getting older in general and needing more medications. And Disney owns ESPN. That's how they get about half their revenue. They own Marvel. They own theme parks. They own Star Wars. Disney is just a long-term winner. So is CVS. So is Nike. So are all these companies on the list. They're just terrific, and that's why I'm putting money into them. Number 6 is Johnson & Johnson. Johnson & Johnson, I forget how many shares she has, but she has about 10 shares, about $1,000 worth. They're all about the same. And Johnson & Johnson is, again, another long-term winner. This is a huge company that pays a dividend. It grows revenues, it grows earnings. Just a terrific stock for anyone's portfolio. The reason why I bought it for her is because she actually uses the shampoo. So it's something that I can show her that she actually uses one of the products for her crazy hair. Number 7 on the list is Hormel Foods, HRL. Some people have never heard of this company, but it's actually a very good company to get into. They are growing earnings, they're growing revenues. They do pay about a 2% dividend, which is pretty good. And if you look at the chart of this company, the price chart, it's down to about $33, $34 a share right now. And this is very inexpensive for the company. It's trading at about 20 or the low 20 times earnings. Relatively inexpensive for a company that's just doing so well, growing earnings and revenues. Number 8 on the list is Rowe Price. I used to have over $30,000 invested in this company. It's just so stable. This company has zero debt, and they have a lot of cash on the books. They pay over a 3% dividend, and they're what's known as a dividend aristocrat, something like that. I don't usually say that word out loud. So this company is just so stable. It's raised dividends for 25 years in a row. That's what a dividend aristocrat is, and their dividend is so stable. Their earnings are going up. They basically sell mutual funds, index funds, trading, stuff like that, investment advice, similar to Fidelity or TD Ameritrade or a company like that. I have a lot of faith in it. I bought it for my daughter just because I think it's such a stable company and because they have no debt right now. The 9th stock in this list, I don't know if I would recommend it to everyone, but long term, this company is a winner. Right now, they don't have any earnings though. The symbol is CALM, which stands for Cal-Maine. This is a company that sells eggs to Walmart and a bunch of other companies. They own the chickens. They are the biggest supplier of eggs in America. And I just thought the way that Warren Buffett likes to invest in Coca-Cola, because it's easy to run, it just makes a lot of sense. People are always going to drink Coke. I just think people are always going to eat eggs. You use eggs for everything. So I just wanted to invest in this stock. Long term, I've already done well in this. My daughter is down a little bit in this stock, but I'm not selling anything out of her account. She doesn't know how to say the word sell yet, which is what makes her the best investor in the world right now. Cal-Maine does pay a dividend when they have earnings. When they don't have earnings, they don't pay a dividend. The 10th one in this list is actually ETF, VOO. It's a Vanguard ETF, which is basically, this particular ETF is basically just like an index fund. It has a very low expense ratio of 0.05, which is $5 off every $10,000 you have invested. This ETF basically tracks the whole market, similar to a big mutual fund that you might put your money into. I typically like to invest in stocks, but the reason why I got this for her is because I think index funds are just terrific for everyone, and I just wanted to have her, understand what a index fund was when she gets older, so she can actually see it, that she owns it. Thanks for listening, guys. Please share this video, like it, subscribe. I need subscribers. I want to teach so many people about investing, and I can't wait till my daughter's old enough and I can teach her about investing. But it looks like she's getting bored, so I gotta go, and I'll see you tomorrow. Say bye.
Bye.
Bye.